Hello and welcome to Financial Intelligence. In this video, I'm going to talk about how the US taxation policy has contributed to wealth inequality in the US. The common misconception is that the US taxation system is progressive, meaning that the tax rate is higher for wealthier people than the middle class. But the truth is that the US taxation policies are progressive only when it comes to federal income taxes. The real rich people increase their wealth through ways that are not subject to federal income taxes. The effective tax rates in the US are not progressive. The effective tax rate takes into account all forms of taxation on the individuals, including federal income taxes, corporate tax, and capital income taxes. On that measure, for the top 400 billionaires in the US, the effective tax rate was 23% in 2018, while it was 25 to 30% for working and middle class families. America's tax system is now technically regressive and is a new engine for increasing inequality. I will add the link to this data in the description box below so that you can check it out if you're interested. If you like the type of content that I provide on this channel, don't forget to like this video and subscribe to this channel and hit the notification bell so that you don't miss any of my future videos. In this video, I'm going to elaborate on this topic and show you how this myth has been perpetuated to make people feel that the wealthy are paying their fair share of taxes. Contrary to widely held views, the US tax system is not progressive. In reality, the US taxation policies are actually responsible for creating income inequality. Part 1. Different forms of taxation. Most lower and middle class families make a living through receiving salaries which are subject to federal income taxes. Since for many people this is the only income stream, their definition of taxes is synonymous to federal income taxes. Therefore, when they hear that federal income taxes are progressive, they automatically assume that the US taxation system at its entirety is also progressive. Nothing could be farther from the truth. Unlike lower and middle class families, the super rich have many other ways of adding to their wealth, which are not subject to federal income taxes. The US taxation policies are set up in such a way that they are super beneficial to those who can leverage them. One clear example is capital gain taxes. Most wealthy individuals have invested a large chunk of their wealth in assets such as stocks and ETFs. When you invest in these types of securities and their value grows over time, you do not need to pay any taxes as long as you do not sell them. You could technically buy these securities and hold them forever without paying a dime in taxes. The only time you are required to pay taxes is when you sell them for a profit. Even when you do so, the long-term capital gain tax rate is only 20%. Most wealthy families are long-term investors, so when they purchase assets, they are going to hold those assets for a long time. Their wealth can grow gradually with no taxation as long as those profits are not realized by selling the assets. Of course, this is not exclusive to wealthy families. Any long-term investor can enjoy this kind of tax-free wealth growth. However, the wealthy families have invested much larger amounts of money in this way than the lower and middle class families. Most American families live paycheck to paycheck and they are rarely able to enjoy this type of tax-free wealth growth. Part 2. effective income tax rate. If you look at the federal income tax rate, you'll see that indeed the federal income taxation is progressive. In other words, high earners are supposed to pay higher federal income taxes. However, the right way of looking at the data is to look at the aggregated tax rate, including income taxes, corporate tax, and capital income taxes, and not only at the federal income taxes. It is interesting to look at the effective tax rate paid by 400 billionaires in the US over time compared to the effective tax rate of the bottom 50% of the population. As you can see, the effective tax rate paid by billionaires has been declining steadily since 1960. However, the effective tax rate has stayed relatively flat for the bottom 50% of earners. In 2018, the top 400 billionaires' effective tax rate was 23% compared to 25 to 30% effective tax rate for the bottom 50%. I will add the link to this data in the description box below so that you can check it out. Part 3, Wealth Inequality. The bottom line is that wealth inequality has been increasing in the United States as shown in this chart. The top 1% of the population has seen their wealth grow by 226% since 1980. The middle 60% of the population, in other words, the middle class, have only experienced a modest 46% increase in their income. The taxation system in the US is for the large part responsible for creating this income inequality. Despite the popular belief, the US taxation system is not progressive. The taxation is progressive only when you consider federal income taxes. The real rich increase their wealth from investments that are not subject to federal income taxes. Even if you increase federal income taxes to say 100%, it will have a minimal impact on their earning potential. Tax hikes proposed by the government in most cases only include federal income tax hikes, which are going to disproportionately affect middle-class families. I hope that you liked this video. If you have any comments or suggestions, please add them in the comment section below. And don't forget to like this video and subscribe to this channel, and also hit the notification bell so that you don't miss any of my future videos. Thank you and take care.